Now, in a first-of-its-kind meeting, the top brass of the Reserve Bank met with the board of directors of public sector banks in the capital, and the meeting saw more than 100 attendees. RBI urging banks to remain vigilant on bad loans in good times. Ritu standing by with the details. Ritu, this was an unusual meeting, primarily because of the people who were attending it. But what has been the message from the RBI to bankers?
Well, Shireen, like you said, first of its kind, really, and this is only the first part of the meetings that are going to be held. This one was with the board of directors of public sector banks in New Delhi. The second one is going to be in Mumbai with the private sector banks. But, you know, more than 100 attendees, and you had the top brass of the RBI, Governor Shaktikanta Das, all of the deputy governors, EDs from the Department of Regulation and Supervision that participated in this meeting. And the focus primarily has been on governance and ethics related issues for the board. And, you know, banking executives that we've been speaking to said that RBI emphasized on the role that could be played by boards to strengthen the banks, and overall asked them to have a little more proactive approach. There was a lot of emphasis on risk management, and you know, all of this is really coming in the backdrop of the Silicon Valley Bank-led banking crisis, where now RBI is asking banks in India to remain watchful of any asset liability mismatches or inconsistencies and ensure they take all steps to give the highest priority to and protect depositors at all costs. Now, RBI said more vigilance is warranted by boards, especially when it comes to the risk function, and stressed on the need for boards to have a longer-term vision and not a myopic 1 or 2 year view when it comes to both assets and liabilities management. There was an emphasis placed on the need to strengthen risk and audit committees, more oversight by the boards, and they were encouraged really ask questions, seek data, seek clarifications whenever required. But, you know, like you said, RBI also warned banks that while you're, you know, doing all of this, just remain careful of the environment, because there is a euphoria of sorts and there is a tendency for banks to take unnecessary risk in good times, which could perhaps lead to a buildup of bad loans later. So the overall messaging to boards was become more proactive, remain vigilant, and keep depositors' interests in mind at all times. So this was, you know, the key takeaway. We'll see what happens with the next meeting with the private sector banks.
Yes, we will. Ritu, many thanks for joining us. On to the market action.